everyone, and welcome to our YouTube channel, Moneyline with Nancy at TV. In case you're not a subscriber yet, please do subscribe. Just press the subscribe button as well as turn on the notification bell so that you can get notifications when we upload our videos. Don't also forget to subscribe and join, follow, like our other social media platforms. Of course, you're seeing it right about now. Don't also forget to share this video across your platforms. Enjoy the video. Hello and welcome to the program. Good morning, everyone. This is Moneyline with Nancy, your trusted companion for navigating the world of business, finance, and economy. I am Nancy Nigerian. It's a pleasure to have you join us today. On today's program, we'll bring you highlights and takeaways from the IMF World Bank Spring Meetings. Don't get tired yet. You know why? This is where the global conversation takes center stage. So everything decided here in Washington, D.C. will affect you and I. Nigeria, of course, was represented as the Minister of Finance led the delegation, and we will bring you details from the briefing held by Wale, Edun, who is the Minister of Finance and the Governor of the Central Bank of Nigeria, Olayemi Cardoso, with other Nigerian officials present. Plus, we'll share an important moment from my exchange with the Managing Director of the International Monetary Fund, Kristalina Gogevia, on Africa's rising debt and what it means, of course, for our region's future. It will be an informative show today as the spring meetings of the IMF and World Bank in Washington, D.C. Really takes the center stage. Nigeria's economic managers were on ground engaging with global counterparts as well as development partners. Following the discussions, the Minister of Finance and Coordinating Minister of the Economy, Wale, Edun, alongside the Central Bank Governor, Yemi Cardoso, briefed the media on Nigeria's position, progress, and priorities. The recurring themes for the meeting were that Nigeria should be committed to the path of credible reforms. Nigeria should focus on fiscal responsibility, price stability, and foreign exchange stability, as well as restoring investors' confidence and unlocking new financing channels for development. But let's take a listen to some of the key takeaways from that briefing.
Executive Director at the World Bank and my predecessor in office, EDAFDB, all other protocols respectfully observed, distinguished ladies and gentlemen, gentlemen of the press. We've had a very interesting week, a very busy week at the World Bank IMF Spring Meetings for 2025. We met at a time of global uncertainty, structural shifts, rising trade and geographical tensions, elevated interest rates, high debt levels, particularly for developing countries. And this has impacted these countries heavily, especially in sub-Saharan Africa. We also took time this week as ministers of finance and governors of central banks around the world to review the global policy agenda set by the IMF last October, as well as the update on the World Bank Group's evolution process. And we came out with some conclusions which I will summarize as follows. In terms of the global economy, it is expected to now grow at around 2.8% instead of the earlier predictions of 3.3%. That's a function of the effect of the reciprocal tariff regime and its aftermath that was introduced and announced on April 2. The tariff hikes are affecting real wages. In our own case, it affected the oil price. And so, although we don't have a strong direct transmission of the negative effects of the tariff estimates, the prescriptions that the conversation, renewed hope agenda is already pushing in the direction in which the theme of the World Bank annual meeting spoke about. The theme is jobs, the pathway to prosperity. And Mr. President is already pursuing growth-oriented policies through the various initiatives in agriculture, food security, road and rail infrastructure, social security, as well as most recently reform in the upstream as well as the downstream sectors of the oil industry. So in a nutshell, we have come here, we have had conversations which have encouraged us in the fact that both at the World Bank and at the IMF at the highest levels, they have seen it fit to point out that Nigeria is on the right path in terms of its monetary policy, in terms of its fiscal policy. That was objectively pointed out by the recent upgrade in the rating of Nigeria by Fitch International Ratings Company, which upgraded Nigeria from B- to B with a positive outlook. So all in all, despite global uncertainty, Nigeria is poised for economic growth with job creation. Thank you.
Thank you. Thank you, the Honorable Minister of Finance and Coordinating Minister of the Economy. Now we take the remarks from the Governor of the Central Bank of Nigeria, Mr. Olayemi Cardoso. Thank you, sir.
Yes, thank you. Adopt the protocols of the coordinating minister, Minister of Finance, covered here this evening. And to say that the past week has been one of highly productive engagements with global financial leaders, investors, and members of the Nigerian diaspora. These meetings come at a time of heightened global uncertainty, an era that is testing the resilience of economies worldwide and underscoring the urgent need to build stronger safeguards against external shocks. Against this backdrop, our delegation used the meetings as a platform to spotlight Nigeria's bold economic reforms and explore further measures to enhance macroeconomic stability, strengthen our financial system, and drive inclusive growth for all Nigerians. In the lead up to the meetings, we convened a high-level global forum at NASDAQ market site in New York. The forum brought together top-tier global investors, senior financial stakeholders, and influential diaspora leaders to engage in a candid discussion on Nigeria's macroeconomic outlook and reform trajectory. The forum focused on facts and the future. An open and constructive dialogue aimed at reviewing our progress, addressing challenges, and forging stronger long-term partnerships. Underpinning this engagement was a clear objective: reaffirming the Central Bank of Nigeria's role as a credible, globally respected institution, trusted internationally, and committed to excellence at home. I am pleased to share that the New York Forum delivered powerful outcomes. It significantly bolstered investor confidence in Nigeria's market fundamentals, with leading voices from across the global financial system going on record to affirm the country's economic progress and renewed standing as a compelling investment destination. As the coordinating minister had said, this growing confidence is further reinforced by Fitch's recent upgrade of Nigeria's credit outlook, underscoring international recognition of our disciplined reforms and the bold steps we are taking to restore macroeconomic stability. Ultimately, none of these developments are abstract. They reflect the outcome of consistent policies which have brought about stability in our economy, setting the stage for investment and growth. Thanks to the steps taken over the past 18 months, we have strengthened our monetary buffers and positioned Nigeria to better withstand external shocks. Indeed, the macroeconomic stability we are beginning to see today would not have been possible without these decisive actions. We recognize that inflation remains the most disruptive force to the economic welfare of Nigerians. Our policy stance is firmly focused on bringing inflation down to single digits in a sustainable manner over the medium term. Our goal is to restore price stability, protect household purchasing power, and lay the foundation for long-term investment. Another key pillar of our reforms is a market-determined foreign exchange regime. We have embraced market-driven pricing for the naira, significantly enhancing transparency and restoring investor confidence. Again, thanks to disciplined reforms and policy clarity, the naira has stabilized at a more sustainable level against the US dollar. The one wide gap between the official and parallel market rates has all but disappeared, a first in Nigeria's recent history, and speculative arbitrage has all but vanished. This renewed stability has restored confidence and spurred autonomous inflows through formal channels. These inflows are diversifying our foreign exchange sources beyond oil. Nigeria's external buffers have also strengthened considerably. Our foreign reserves now exceed $38 billion, providing nearly 10 months of import cover. This robust buffer enables us to better withstand external shocks, whether from declining oil prices or global financial turbulence, thereby safeguarding our economy. In 2024, Nigeria recorded a balance of payments surplus of $6.83 billion, the strongest in many years, driven by rising exports and renewed capital inflows. At the same time, we're enhancing the strength of our financial sector. The banking sector recapitalization is well underway with strong momentum and stakeholder alignment, and will ensure that Nigerian banks are fully equipped to support the real economy with greater scale, stability, and capacity. At these spring meetings, our development partners express their confidence in Nigeria's trajectory. Feedback from global investors and the Nigerian diaspora has likewise been overwhelmingly positive, reflecting global alignment with our economic direction. Nigeria is increasingly recognized as a rising economic force, admired for the resolve shown in implementing difficult but necessary reforms. These achievements, while encouraging, only strengthen our resolve to press forward. We will not be complacent. Instead, we will redouble our efforts to ensure these positive trends are sustained. I wish to thank the Honorable Minister of Finance and Coordinating Minister of the Economy for his invaluable partnership. Our progress is anchored in strong collaboration and a shared commitment to Nigeria's economic renewal. To all Nigerians, these reforms are not easy, but they are delivering results. We have moved from a position of vulnerability towards one of growing strength, and our economic trajectory is beginning to turn positive. We return home mindful of global challenges, yet filled with renewed commitment to stay the course and build on our gains in stability and resilience. Thank you for listening.
Good evening, Honorable Minister, and good evening, Governor. My questions are to both HM and the Governor. So I think I'll start with HM. We've been in these meetings from Monday, and one of the recurring themes was, especially for Nigeria, the meetings, because for those of us that are here, we're really active in all the press conferences, and we heard what was said about Nigeria, is the indirect impact of the downward pressure on oil prices, talking about fiscal sustainability. What step is Nigeria taking now, especially from the fiscal side, to avoid a revenue challenge as our oil prices are depressed? You know that your budget for this year, $75, you're already operating at a deficit with Brent selling for around $65. I would also like to know if there are scenario plannings for the budget right now. What is your worst case scenario if oil continues to fall? Then, Mr. Governor, my question for you is, Madam Georgieva did say that monetary policies needs to be local and tailored around what our needs are. So my question for you today is, on the monetary policy side, you've had meetings with all of them. What are the key takeaways from these meetings with them? What are you drawing? What are the lessons for us, localized lessons for us? Thank you.
Babajide, your hand is longer. Thank you.
Thank you. Honorable Minister and
Rep Nigeria very well at these all-important meetings. Nancy, you rightly pointed out that the era of reciprocal tariffs regime, as it's called, that was recently introduced earlier this month does not affect Nigeria as much as others, and that's because our major export to the US is oil, and oil and minerals are excluded from the reciprocal tariff regime. However, as you rightly say, the indirect effect is there. And because of the global uncertainty and the volatility that followed in the financial markets, the oil price fell 20% initially and was getting to below 60. But as the week has worn on and as there has been a pause in the reciprocal tariff regime, that too has started to settle a little bit of the uncertainty, and the oil price has moved back up, as you say, to about 65. It is, as we all know, below the 2025 budget estimate, as indeed is obvious to all. But a budget is a statement of intent, and you always have to calibrate, you always have to adjust to the actual reality on ground and the funds available. And that is exactly what is being done. Immediately, the economic management team formed a subcommittee which included various obvious ministries, budget and planning, budget office, central bank, and so forth. And that subcommittee was charged with immediately just looking at and analyzing and modeling what really are the various scenarios under which we would be operating if this situation persisted. And in fact, it's not all negative. As has been pointed out, and you must have heard this week, sometimes these difficult situations provide opportunity. And I'll give one example. Our excellent Minister of Health and coordinating Minister of Social Welfare, immediately the announcement was made that USAID would be no longer funded by the US government. It meant that funding for antiretroviral drugs, funding for medicine for tuberculosis and malaria that Nigeria benefited from to the tune of $800 million or thereabouts would no longer be available. He immediately, with his team, did the analysis, and he found out that by purchasing from cheaper sources and by cutting out some of the administrative expenses that were part of the package that came from USAID originally, we could get by with finding a quarter of that amount and yet still provide the health care to our citizens. And of course, this type of support and aid is not to be forever. So they too, I suppose, have their point. But in terms of the reaction, as I say, the analysis is being done, will be presented to the economic management team, and ultimately to the Federal Executive Council, and further decisions will be made. But we must also remember that it is not just about the oil sector, but it is the primary source of foreign exchange and indeed of government revenue. We have a new team at NNPC. They have been charged with increasing production. So if price goes down but production goes up, you make up. You have a chance to make up for some of that deficit. They have been charged with minimizing, rationalizing costs by running efficiencies, by looking for efficiencies across the board. In addition, we have a robust revenue assurance initiative to automate and digitize even more than before the revenue earning agencies, ministries, and departments of government to make sure that what is paid by the public is received in the coffers of government. And of course, you know, we have with us the chairman of the Senate Committee on Finance, as well as the deputy chairman of the House Committee on Finance. And they are major players as far as the tax reform bill is concerned. And I think they can probably tell you better than I, but I think the imminent passing of that tax reform bill is on the horizon. And once it is passed, it does have in it the potential for increasing tax as a percentage of GDP. It does have in it the potential for increasing tax revenues that are earned by the government. And in addition, the government has pivoted away from focus. Initially, there was focus on funding, cheap funding from concessional funding from institutional organizations such as the World Bank, funding from bilateral agencies, governments, German, EU, French, and then ultimately funding, commercial funding, first from Nigerians, from the diaspora of Nigeria, saving their dollars with by buying government's dollar-denominated Eurobonds, and then ultimately going to the Eurobond market. But that has run its course. And the focus now is on domestic revenue mobilization. The focus is on crowding in the private sector. And it's important to point out that the philosophy, the strategy, and the policy of the administration of President Bola Ahmed Tinubu is to crowd in the private sector to stabilize the economy so that they can come in and invest across the board. Infrastructure, digital, toll roads, all revenue earning areas that the government is involved in are open to the private sector. And even the budget itself contains a line for privatization, showing the intention of opening up the economy to the private sector. And that is, as you can well imagine, is a way of blocking and filling any gaps that might have arisen from the fallout, the indirect effects, as you call them. And so the next stage, you ask what the next stage is. The next stage is to go for growth. Having stabilized the economy, there is a plan. And we have 3.4% growth on average for 2024. But in the last quarter, it was 3.84%, so it's accelerating, it's speeding up. And the objective is to nearly double that growth. Unless we get to about 7% per annum growth, we are not going to substantially reduce poverty and improve the life of Nigerians. So that is the target, that's the commitment, and the way to get it is by focusing on agriculture, increasing productivity there, as well as making food more available. Infrastructure, particularly the digital economy where young people play with coding, with business support, with e-commerce and the like. And then also improving and increasing through structural reforms, something that the governor of Central Bank will be very much part of overseeing, is improving access to finance. So we'll go with our suggestions, our proposals. He will look at them from the regulatory point of view and hopefully pass them, thereby giving micro businesses, small and medium-scale enterprises, as well as larger enterprises, better access to financing. In terms of the question on social protection, it's critical. It is a promise of the president to make sure that the poor and the most vulnerable are not left behind. we have a direct benefit transfer program. It started off and it wasn't robust enough, and we stopped and we went back to the drawing board. And now we have a standard that payments that are going out on a regular basis, on a monthly basis, to people on the social register, each person is identified biometrically through a NIN, and each person has a digital methodology for reaching them. So they are paid either through their bank account or they are paid through a mobile wallet. So when you ask, who did you pay yesterday? How much did you give them and when did you give it to them? It can easily, that information can easily be provided. Right now, we are running at a rate of about 1 million additional people every month are brought robustly onto the social register, because we have a social register of about 20 million households and one person representing that household. However, not all of them have been captured biometrically and uniquely. So that's the exercise that's going on. The aim is to ramp up to about 3 million people being captured into that database every month, so that in no time you have a database of the poor who can be reached at any time that the government needs to, not just for the existing direct benefit transfer program, but for at any time that the government needs to reach and help these people. And finally, in terms of transparency, in terms of the oil sector in particular, but data generally, there is a new team in NNPC, and one of the areas in which they will be tasked is to provide transparent and complete and regular data as required by Nigerians, by the public as a whole. And in addition, one of the important ways of communicating to Nigerians is through data. So we have an exercise, a very urgent exercise being carried out by a team to ensure that we raise the quality and we have first-class fiscal data on all aspects of government's finances and consistency across all the areas that provide that data, be it central bank, debt management office, budget office, accountant general's office. That is the way to communicate, to have robust, regular, up-to-date, and transparent data to provide to the public. Thank you.
Thank you, Honorable Minister. The Governor of the Central Bank of Nigeria, please.
Thank you. Lessons learned from the discourse of the past few days as far as monetary policy is concerned. Clearly, for the central bank being the custodians of stability, a number of things have come out which are important for us to take cognizance of. One, of course, is the fact that we are entering a period of heightened uncertainty. And that one size doesn't fit all in terms of trying to overcome whatever challenges come. One size doesn't fit. And you can even argue that one size has never fitted all, but more than ever before. You see, there's a tendency with central banks and central bank leadership. One of the things that I have found very useful over the past months is meeting colleagues, exchanging ideas, and seeing how they have been able to tackle problems and challenges they've had. And I think the message that has come out now is that more than ever before, you've got to look at your own peculiar situation, because the uncertainty is the effects of the uncertainty vary widely from one place to the other. And riding on top of that is also the response to whatever challenges we see and whatever risks we see. And I think the message that has come out there is that it is critically vital to respond with agility and not find yourself paying the price of not responding in the way and manner that you should. And I think we're a case in point, frankly, because these reforms that we have done, I dare say that if we hadn't done them on a timely basis, it would have been very difficult to begin to address some of those things at a period of heightened uncertainty. So that is something to bear in mind. You cannot afford to be slack. And right now, going forward, there's a need for heightened surveillance. In other words, you've got to be proactive in terms of how you see the future and what tools you deploy to ensure that your function as a custodian of stability does not get inappropriately compromised for lack of doing that. So there's need to be forward-looking and not wait until certain things happen before you start taking appropriate action. So I think that is it. And as I said again, thankfully, the responses that we have had in terms of building buffers as a result of the things we have done are useful going forward. The other question was on the issue of data. And again, I was pleased that what came out from the investor in that investor roadshow was the fact that they were seeing the promptness of data coming from the central bank and had not seen that level of promptness and transparency anywhere else in the world. I think we're all there. This is what was said. So I think that is a good thing. And all we will do is continue to make data the center of decision making within the central bank. And it was one of the things I said a lot earlier. And I remember when I was called to the Senate before I was appointed the CBN governor, I did say and I did commit that decisions would be data-driven and evidence-based. So this is part of that journey. We will only continue to strengthen what we have, and in conjunction with our development partners, because we have spoken to a number of them with respect to how to give us technical assistance to continue to develop the tools we are using and make them even more stronger and fit for purpose. That, of course, as you know, gives better credence to the monetary policy decisions that we make, and of course helps along the road of transparency and accountability. On the issue of remittance flows, firstly to say that clearly we can see here that the journey that we started a while back is beginning to pay off. Remittance proceeds have contributed towards the diversification of foreign exchange proceeds. And there's still a way to go. There's still a way to go. If you look at the indices of some countries, this is all they even depend on. They do nothing else but just remittances. Talk less of a country like ours that have other channels of foreign exchange revenues, and hopefully we'll be building more of that. So you can see that if we concentrate on these particular sectors, which at one point in time really seemed like nothing, but are now gaining greater traction, the future is bright. I'm pleased that the banking system has come up with certain products which are meant to reach the non-resident Nigerians. They have products whereby non-resident Nigerians can invest in both Naira and dollars, and at the end of that investment, they can repatriate their money back as they like. Now, part of the feedback I am getting since the past week is that the diasporans are very happy with this development, because for many of them, they now look for the opportunity to diversify their investments for whatever reason. They look for that opportunity to diversify their investments. And now that they have seen that you can bring in your money, you can take it out, and as I said, the banks are coming up with products that will enable them do things way beyond what they were doing before, and with minimum risk. With minimum risk. I believe that the developments that we are seeing in the remittance space is a very positive development for the diasporans. Thank you.
And that's it for today's edition of Moneyline with Nancy. Thank you for always staying tuned. Thank you for making it up to this minute watching the video. Thank you all. Don't forget to subscribe to our YouTube channel, Moneyline with Nancy TV. Like, follow all our other social media platforms where we keep you up to speed with fantastic interviews, as well as markets, personal finance, business, and economy information. This is the best place to be. I'll see you all again in the next video.